The U.S. dollar moved sharply higher in the early Asian Pacific session. The catalyst was a report or a ruling by a U.S. federal court saying that Trump's Liberation Day tariffs were not constitutional and rescinded them, but he will appeal, and there are other ways around it. And as those stories started to unfold, we started to see a move back to the downside in the U.S. dollar. In this video, I'll take a look at the three major currency pairs: the euro versus U.S. dollar, dollar versus yen, and sterling versus U.S. dollar, from a technical perspective, and sort of unravel that, and also unravel the gain in the dollar and where that went and what it may have run into. So let's get started. Looking at the euro versus U.S. dollar, the hourly chart, this move to the downside started around 1.1283 and extended down below the 1.12178, which was near the low price right through here, which is a low price from last week's trading. We also had this low right here. So we fell short of the 61.8% retracement of the move up from the May low to the May high, the May trading range, right near the 112 level. So it looks like we stalled right around the 112.09-ish type level before we started to rotate back to the upside, extending back above the 50% retracement. We had a little move back below before rotating back to the upside, and now we're back above this old swing level right through here. The swing level, the yellow area goes back to this period right through here. You can see how it was a nice little floor. We broke below the floor and then tried to extend above it here and then reestablish. Got messy through here, but for the most part, the old floor, now ceiling, did a fairly decent job in trading today. We broke below that floor and then moved back above it, and now back above it. We'll see if the 112.65 level can hold support now in the euro versus U.S. dollar. If we're able to do that, then the bias remains more to the upside as the market trades back above the old floor, which is always a good thing. So on the top side, we have the 200-hour moving average and 100-hour moving average to aspire toward. If we do get above those levels, then it really opens the door for further upside. Now, on the downside, if we start to break back below the 112.65 level, we could see the bias turn back to the downside with 50% retracement. Next key target for the euro versus U.S. dollar. Taking a look at the dollar versus yen. Off its hourly chart, we extended all the way up to and through the 61.8% retracement, but did find some willing sellers near the swing high right here, also swing high right here, also near swing highs through here. So there was some reason to put a halt on the rally right through there. The market moved quickly to the upside, and oftentimes it looks for that corrective type of move. The corrective move did happen, but we've since in the European session started to retrace back below the 50% retracement of the May trading range. That level comes in at 145.37, and breaking below that level is always something to pay attention to. It's sort of the midpoint, the apex of a seesaw, or however you want to term it. But with bullish above and bearish below, breaking back below, it has given the sellers the go ahead to push that back down to the downside. Now, where did we return? We returned back to the 100-hour moving average. Note from yesterday, we came up to the 100-hour moving average not once, not twice, but three times in the Asian session, fell off, stalled against the 200-hour moving average, and then broke through it in the New York session here, and then use that level as support. And as you can see, that was a springboard to the upside here, thanks to the news, and that propelled all the price up to the high. But now we're back down, testing that familiar level, which was resistance, which was support, and now it's support again, that 144.887. So we could see some support buyers, just because risk can be defined and risk can be limited against that level. We always know that. And as long as the price traders can use that level as a risk-defining level, you can always buy against it with the stop below and just risk a little to make more than a little is the goal. The more than a little would be a move back toward the 50%, and then see what happens there. So pay attention to that level. If we do break below it, then we look back toward the 38.2% retracement of the May trading range at 144.60 as the next key target on the downside. Finally, let's take a look at the sterling versus U.S. dollar, and this will look at the hourly chart. And we fell below the 200-hour moving average. That was the first time since this day right here, which goes back to May 19th, breaking below 200-hour moving average. I gave the sellers to go ahead to push to the downside, and we did extend down toward the 38.2% retracement of the move up from the May low to the May high. That 38.2% retracement came in at 1.3419, and you can see the market moved just a little bit below that level, but then rebounded back into this swing area through here, which goes back in time, by the way. If I go back and back, let me do it this way. Here's a swing area. You can see that there's different swing highs right through here, forming that area before moving to the downside. It got messy through here, but then reestablished resistance against the level right here and here and here, which tried to put a lid on it, but then held this trend line and broke above it and then based against it before moving to the upside. So you can see the importance of this level right through here, and breaking above that, breaking above the 200-hour moving average gave the buyers to go ahead to even push even higher above these highs, this high and this low right through here, this swing area right through here, and rotating back down. Now we are retesting the 200-hour moving average as the U.S. session begins. That level comes to 1.34566, and we'll see what happens against that 200-hour moving average. Remember, it was the last time we broke above it, or last time we were below. It was back here on May 19th and broke below it and trading here today. So there was some disappointment on the failed break below that 200-hour moving average. We'll see if the buyers come in against that level. If it doesn't, we move back down and we come back to the swing area, come back to the 38.2% retracement, and start the battle between that level and the 200-hour moving average. So there you have it, a look at three of the major currency pairs to kickstart your trading day. My name is Greg Bogolowski. Good fortune to trading. Bye-bye now.